So in this video, I want to talk about something that has made hundreds of funded traders in my community that will teach you how to mechanically see the market with a fixed set of rules to understand exactly where expectational order flow is going to go. So whether you're trading smart money concepts, ICT, trend lines, retail, support resistance, fib lines, EMAs, TMAs, once you understand these mechanical rules of structure, it will allow you to always trade on the right side of the market, no matter what strategy that you are trading. If you apply the mechanical rules that I'm going to go through with you in this video, I can guarantee you one of three things. Number one, you're also going to definitely boost your strike rate or your win rate. Number two, you're going to skyrocket your risk to reward. So instead of now looking for 1 to 2s, 1 to 3s, understanding these mechanical rules in this video, you will be able to catch 1 to 10s, 1 to 20s, sometimes myself, even up to 1 to 80 risk to reward trades. Thirdly, you will have a crystal clear understanding of the higher time frame intentions paired up with the lower time frame, which will allow you to trade the lower time frame correctly and have that crystal clear and clarity understanding of exactly where price wants to go so that you can use that to your advantage. Because when you map your charts this way, you're going to know exactly what you're looking for. You're going to know exactly where to enter. You're going to know exactly which high and low point the market is wanting to target. As soon as I hop into the charts with my members every single morning, this is the first thing I mark up and look for so that we all have this crystal clear understanding of exactly where price will want to go for the rest of the day and even the rest of the week. So to keep things as practical and easy for you as possible, I kind of just quickly want to start things off by going through this mind graph theoretical analogy. So probably some of you at this point realize this is the real basics of trading. What is a downtrend and what is an uptrend? Taught back in the basic baby pips course already. I quickly want to break down this analogy because trading comes down to the basics. Once you can master the basics and identify your structure, expectational order flow, and where price is looking to target, the possibilities are endless for you. So just bear with me for a few minutes as we go through this mind graph. Then we will hop through a live chart walkthrough where you will understand how to go and map this out yourself and identify your crystal clear structure story in the markets, and also correlating the higher time frame intention with the lower time frames so that you know exactly where you can enter on the lower time frames. Price will always be printed to you in the forms of higher highs or lower lows. So let's firstly take a look at the uptrend. All right, so price will create these strong higher lows and these weak higher highs. All right, what makes these lows strong is because they are taking out the most recent and previous highs. So if we quickly had to go through this low is strong because it took out this high. This low is strong because it took out this high. This low is strong because it took out this high. Once price has that bearish shift and takes out the low, this high now becomes strong because it took out this low. And this will then continue to repeat itself. All right, this low is weak, and this high is strong because this high took out the previous low. This high is strong because it took out the previous low. So all this is a continuation and following your structure story. Obviously, price is not going to be printed as clean as this. Price will look more something like this. All right, so first and foremost, we always start on the 4-hour time frame in our rule-based system. So let's go and take this as our overall 4-hour structure, and all of the structure that happens in between these 4-hour highs and lows is what you call internal structure on the 15-minute time frame. So even your time frames are fully rule-based and mechanical. All right, so price has had that 4-hour break of structure to the upside. All right, price will then have that internal bearish shift to respect supply zones on the 15-minute time frame to cater for that 4-hour pullback to mitigate those 4-hour demands to continue targeting these weak highs and create these 4-hour breaks of structure to the upside. All right, so the exact same applies over here. This low is strong because it took out this high. This low is strong because it took out the previous high. This low is strong because it took out that high. This low is strong because it took out that high. And the same continues until you have that bearish shift. All right, so all this is is a reaction to what price gives you. This is where a lot of retail, SMC, and even ICT traders make mistakes, is once they see price is now in this bearish trend, right, with breaks of structures to the downside, respecting supply zones, looking to continue shorts, that is incorrect, because they don't look at the higher time frame analysis and intention. All right, the higher time frame intention is for price to continue targeting these weak highs. So although a price appears to be bearish on the internal time frame, you have to keep in mind that the higher time frame is still bullish, and we can expect that lower time frame bearish to bullish shift with that break of structure to the upside to then respect demand zones to continue targeting the 15-minute weak highs and the overall 4-hour weak highs. Once price breaks that 4-hour weak high to the upside, we want to look for the swing low that created this break of structure. All right, so there's many ways that some people would do this, but I'm going to show you a much more simple mechanical way. Some people will look at this as the swing low, some people will look at this as the swing low, some people will look at this. But how we go and look at this is you will go and take a fib retracement from the previous swing range, that's from the high to the previous low. Look for the lowest point in the swing range that created this break of structure. So in this case, your rule is it's going to be this lowest point over here. Not this low point, not this low point, or not this low point. You take the lowest point in the previous swing range. And a Fibonacci tool, I will quickly right click and show you my settings for that. All right, so if you want to go and copy and paste this, it's 0, 1, and 0.5 at gray, gray, and black. And I just kind of highlight the equilibrium. It's a great way to identify the equilibrium, discount, and premium of your previous swing ranges, but that's something we'll talk about in another video. For now, I just want you to grasp the idea of how we mark out structure here at Funded. All right, so the rule is look for the lowest point in the previous swing range that created this break of structure. So in this case, this would have now become your new low, which we can go and call our 4-hour strong low. So expectational order flow would be after that break of structure is that internal pullback, that bullish shift, all right, to then have that internal pullback into areas of demand, to then continue targeting those 4-hour weak highs. Let's quickly take a look at a bearish example before we continue on to a opposite trend switch example, and then the final live example and how you can actually go and trade this yourself live. All right, so exact same thing with a bearish market. Price is either going to be printed to you in the forms of higher highs or lower lows. All right, so in a bearish market, you will have the higher time frame, in our case, the 4-hour time frame, having those break of structures to the downside. Now, instead of creating strong lows, you're creating strong highs, and price is creating lower lows. All right, so this high is strong because it took out this low. This high is strong because it took out this low, making this a weak low, making this a weak low. This high is strong because it took out this low, making this a strong high, making this a weak low. So another rule that I want you to write down, expectational order flow is always 100% of the time to target the weak lows. So although price now on that internal time frame is going to have that pullback with those break of structures to the upside, price is still not bullish until it takes out the previous strong high. All right, so expectation over here is for price to have that internal 15-minute time frame shift, all right, to have that 15-minute pullback to fulfill areas of supply, to then go and target the 4-hour weak lows. So that's another rule I want you to write down, is price's expectation is to always go and target those weak lows and weak highs. Again, obviously price is not going to be printed as neatly as this. Price will look more something like this. All right, so exact same criteria. Price will have that 4-hour break of structure to the downside, making this a strong high, making this a weak low, because this weak low did not take out the previous strong high. So expectational order flow is for price to respect the strong high and to continue targeting these weak lows. So here's a good example of where price will have that bullish shift, right, that M15 pullback respecting areas of demand, to continue bullish to ride the overall 4-hour pullback. But from there, expectational order flow is then to shift and have that M15 break of structure to the downside, that M15 pullback, to continue targeting those weak lows. And the exact same applies over here. What you're going to do is you go and take your Fibonacci tool, highlight the previous high to the previous low, just go and drag it across, and go and identify the highest point in this box range that created the break of structure. So most people, or not most, but some people will see this as the swing high. Some people will see this. Some people will see this. But in our case, with our rules, it's the highest point, which in this case, this would be our strong swing high over here. Another way to think about this, why we take the lowest point in the previous swing range to break the previous high or low, is that there was a hell of a lot of money that was pumped into the markets over here to continue price to target these weak highs and weak lows. So let's just quickly take this bullish example. All right. Comment down below where you think the most money was pumped into the market. Was it here, 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 or here? It would have been the lowest point, because this lowest point made the biggest move. Therefore, there are the most orders sitting at this lowest point, which is why this becomes our overall high time frame swing low. And again, an easy way to go and identify that is take your Fibonacci tool over the previous range, highlight that range, and look for the lowest point that created that break of structure to the upside. Before we hop onto the live chart, let's take a look at a trend change example. This is also important to understand. So I'm quickly going to break down this for you and how you can identify these changes and ride these trend changes with the lower time frame as well. All right, so let's go and identify this as our overall 4-hour structure story. All right, so we'll stick to a higher time frame for now, and I'll briefly break it down to the lower time frame. All right, so 4-hour price action is printing right over here higher highs with higher lows. All right, so these lows are strong because they're taking out the previous high. So this low is strong because it took out this high. This low is strong because it took out this high. All right, so then over here, we've had that bearish and break of structure shift to the downside. So this low is no longer strong because it couldn't take out this high. You'll see price pulled back, but couldn't break this high, and instead reversed and broke that low. So therefore, this now becomes a strong high because it took out the previous low. So expectational order flow after this break of structure is for that pullback to respect the strong high. And as I explained, the rule that you must write down is price's expectation is to always target the weak lows. All right, so price continued to have that 4-hour pullback to target these weak lows. Price had that pullback to continue targeting these weak lows. This is a strong high because it took out this low. This is a strong high because it took out the previous low. And again over here, price now had that trend change to the upside. This low took out the previous high, whereas expectational order flow over here was for price to respect that high and to continue targeting these weak lows. But it could not do that and broke structure to the upside. So this now becomes a strong low because it took out the previous high. This becomes a strong low because it took out the previous high. And remember, we are never going to know where these low and high points are going to be. We will never know until this low point is going to be here, until price has that pullback and takes out that low. But again, another mechanical rule base that I'm going to teach you in the live walkthrough that you can identify these lows before they are taken out will help you see your structure story much more clear on the live chart. To break this down, how you can identify these low and high points is, remember, on the internal time frame, structure is going to look like this. There's going to be internal highs and lows within the higher time frame highs and lows. So once price gets to its pullback phase and has that M15 break of structure to the upside, you can then go and highlight this as your low point, and this would be your high point. So at this moment in time, expectational order flow is to target the M15 weak highs and to target the 4-hour weak highs, to have that M15 pullback into areas of demand to continue targeting these weak highs. Another rule that I want you to write down is the M15 break of structure to the upside identifies your higher time frame lows and highs. So over here, we had that break of structure to the upside, right? You'd have that M15 shift to the downside, that M15 pullback. You can then go and highlight this as your higher time frame 4-hour high. All right, to continue bullish, expectational order flow over here was to respect the strong low and to continue targeting this weak high. But price could not do that. Instead, it didn't have that M15 shift, but just continued bullish and broke this weak low. Therefore, once price now gives you that M15 break of structure to the upside, this now becomes your weak low and your strong high because the previous high took out the low. So then, Once you've had that M15 breaker structure to the upside, you can mark this as your 4-hour low. So an M15 breaker structure to the upside or the downside identifies your higher time frame low or high point. All right, so let's go and hop onto the live chart and go through a live example of this. So what I'm going to do is I'm going to come over to XAU USD. Remember, every market, every time frame follows structure and its rules. So you can hop onto any chart and map this out with me. If you want to follow with me so that you can practice yourself as you're watching this video, I'm going to come back all the way to Thursday, 5th of May, 2022. All right, and let's just go and mark out our previous 4-hour structure and continue following the structure as we replay price. So I'm just using the replay tool on tradingview.com, and I'm using the XAUSD Pepperstone feed on the 4-hour time frame, and I'm currently at Thursday, 5th of May, 2022. All right, so let's go and mark out our 4-hour structure system. So let's go and mark out and find our 4-hour highs and lows. All right, so let's quickly go. If you want to make this a little bit easier for yourself, you can go and use the path tool over here, and you can go and mark this out with this tool. All right, so price over here had that breaker structure to the upside right here with the candle body closure, so we can highlight that as our 4-hour boss. What we go and do is we go and look for the previous swing range. So over here, we had that breaker structure to the upside, that 4-hour pullback to respect areas of demand to continue targeting these weak highs. So from this low point to this high point, take your Fibonacci tool. Now go and look for the lowest point in this range that caused this break of structure, which in this case would make this our 4-hour strong low. Right here, so we can mark this as our 4-hour strong. And like I mentioned, you can go and use the path tool to help you with this. All right, breaker structure, pullback, breaker structure. Let me just zoom out a little bit there. Price is busy respecting the strong low. All right, so it had a bit of a mini pullback and just ranged over here, but could not go and target these weak highs, and instead broke structure to the downside. So let's go and keep marking this out. Personally, I don't like using this path tool. I like to do it with my 4-hour strong highs and lows horizontal line tool. All right, so we've had that 4-hour break of structure to the downside, that M15 break of structure to the downside. So this then becomes our 4-hour weak high. So expectational order flow over here, as I mentioned, as one of your biggest rules, is for price to target these weak highs. All right, so price had that M15 pullback. All right, that shift to try and target these weak highs, but it couldn't. Instead, it had that M15 breaker structure to the downside, the M15 pullback, and continued to break structure to the downside. So from this current swing range, from the high till the low, you look for the highest point over here that created that break of structure, which in this case now is our 4-hour strong high. Because a lot of money was pumped into the market over here to turn the market from bullish to bearish and to break the previous strong low. All right, so over here, after that body closure break of structure, what can we expect? Is that pullback to happen? All right, so over here, if I hop over to the 15-minute time frame, you'll see after this break of structure, we had M15 structure, break of structure to the downside, break of structure to the downside created by this high. Then we had that pullback. All right, so price could not target these M15 weak lows, but instead broke structure to the upside. So this then signals price is now in that pullback phase, so that we can then highlight this as our 4-hour weak low. And at the time, if I bring back price just a little bit over here, and I come back to the 4-hour, this was our 4-hour weak low and our 4-hour strong high. Expectational order flow is to somewhere in this range shift bearish and target this 4-hour weak low. So at this point in time, price didn't pull all the way back to extreme areas of supply and discounted areas of that 4-hour swing range. Instead, it just pulled back slightly, which if I come over to the 15-minute time frame, all right, so we had that M15 breaker structure. We then had that M15 breaker structure to the downside, that M15 pullback into areas of supply to continue targeting these M15 weak lows. All right, so price is now continuing to target the overall 4-hour weak lows. So let's continue price a little bit over here. All right, there's our H4 break of structure to the downside. That's our swing break. So we can highlight that as a 4-hour boss. And the highest point in the previous swing range that caused this was this high point over here. So this now becomes our 4-hour strong, and we can delete our previous 4-hour strong high. So now if we come over to the M15 time frame, we've had that M15 break a structure to the downside, that pullback, which was created by this high, but price broke structure to the upside instead of respecting the strong high to target these weak lows. So therefore, we can go and successfully mark this as our 4-hour weak low. All right, let's come back to the 4-hour. So over here is now our new 4-hour swing range. So what is expectational order flow? Is for price to pull back, to shift bearish, to then go and target these 4-hour weak lows. So let's play price and see what happens. I went a little bit quick, but let's just go and recap this. All right, so there was that pullback of the overall 4-hour swing range to mitigate areas of supply, which price then had, if I come over to the M15. All right, so let me just delete this cookie pen. M15, break a structure to the upside, break a structure to the upside. Mitigation into 4-hour areas of supply. M15, break a structure to the downside. M15 pullback, mitigating areas of supply. Break a structure to the downside. M15 pullback, break a structure to the downside. And now it's continuing to follow that pullback, mitigating areas of supply, to continue targeting those 4-hour weak lows. So now it's just following. If I draw this out a little bit more neatly, it will look something like this. There's your M15 shift, that M15 pullback, break a structure, pullback, break a structure, pullback, break a structure. So let's go and continue and see what price does. And price now targets that 4-hour weak low. So if I come back to the 4-hour time frame, alrighty. So now we've had that 4-hour break of structure to the downside. And what we go and do is we go and highlight the low to the previous high, look for the highest point in this previous swing range that created this break of structure, which is this point over here. That becomes our new 4-hour strong high. We now need to wait for that M15 break of structure to the upside to confirm our 4-hour weak low. All right, so it's still bearish, and right over there we've had that M15 break a structure. All right, so we want to see this high get taken out to confirm our 4-hour weak low. All right, so the M15 is still not shifted bullish because we've had that M15 pullback, price targets at that M15 low. So this is now our new M15 strong high. So as soon as price takes that, we can identify our 4-hour weak low and M15 break of structure. So this now becomes our new M15 strong high. As soon as price takes that, we can mark out our 4-hour weak low. All right, so price has now had that M15 pullback, break a structure to the downside. This just becomes our new M15 strong high. And there we go. Price has now had that M15 shift to the upside. So we can then go and mark this out. Quickly just delete all of this as our 4-hour weak low. So that becomes our 4-hour weak. If I come over to the 4-hour time frame, this is our current 4-hour range. All right, there's your 4-hour weak low and your 4-hour strong high. So now expectational order flow is for price to have that 4-hour pullback, to have that bearish shift, to then continue targeting these weak lows. So let's continue price on the 4-hour, see what happens. There's that M15 pullback. All right, there's your M15 shift. So we can expect price to respect areas of supply. Price is now breaking structures to the downside internally. All right, so let's just quickly go over this. We've had that break a structure, pullback, break a structure, pullback, break a structure, pullback, break a structure to the downside, pullback, break a structure to the downside, pullback to continue targeting these weak lows. So over here was your bearish shift, that pullback into areas of supply over here. So expectational order flow is now to go and take out this 4-hour weak low, which right there, we've now had that break of structure to the downside. So let's take a look at Euro USD for another example. All right, so I'm going to come over to the 4-hour time frame. I'm just going to quickly remove all my drawings, and I'm going to come back to the Friday, 17th of Feb, 2023. All right, let's go and mark this out. So we've had over here, just want to get my Koki pen. Just want to get my lines. This 4-hour break of structure to the upside with a candle body closure. So that becomes our 4-hour boss. All right. Which was created by the lowest point over here, which this over here became our strong low. So that's our 4-hour strong low. All right. So price then had that 4-hour break of structure, but never shifted bearish, just continued going bullish until this break of structure to the downside, which over here signals we're now in the 4-hour pullback phase. So we can then highlight this as our 4-hour weak high. So expectational order flow is for price to pull back, have that trend shift to continue targeting those weak highs. So yes, although price is now currently bearish over here, most traders now looking for shorts of supply zones, all right, over here, over here, over here, to continue riding price lower. Is this a valid idea? No, because our higher time frame intention is for price to target these weak highs. All right, so I'm just going to quickly go and mark this out as our 4-hour weak high. So let's go and take a look at what price does. All right, still bearish, breaking structures to the downside. If we go and mark this out, break a structure, pull back, break a structure, pull back, break a structure, pull back. So until price takes out this high, we're still bearish on the internal 15-minute time frame. Okay, break a structure, pull back. So this is now our new high over here. All right, so pullback, break of structure created with this high. Let me just quickly go and mark this out more neatly. Over here, break a structure, strong high, price then broke structure to the upside. So now expectational order flow is to pull back, continue targeting these M15 weak highs or the internal time frame weak highs to then go and target the overall weak high. So let's take a look at what happens. All right, pull back, break a structure to the upside. Beautiful. Pull back to target this weak high. Beautiful. There we go. Break of structure, pull back, targeting those weak highs. Break a structure, pull back to now target this weak high. And there we've also had now that overall 4-hour break of structure to the upside. So as you can see over here, once you start to see your structure story, you get that crystal clear understanding of exactly where you lie in the market. So hopefully this has made quite a bit of sense to you guys, especially for some of you that are new to the way that I mark out structure here with my members and my team, and also here on YouTube. It can take quite a bit of time for you to go and practice seeing this for yourself. What I recommend you do is open up a chart, practice marking out these mind graphs, and practice seeing it on the live chart itself. So let's, for example, quickly, before I hop off this video, go and take a look at a live example of where price currently is. So let's have a look at Euro USD. I'm just going to remove all my drawings, cancel the replay, and I'm going to come back to live price. All right, so over here, where price had, where we finished off now, we had that break of structure to the upside, 4-hour time frame. So that's our 4-hour boss. All right, this was our previous 4-hour strong low. We then go and take our Fibonacci retracement tool, highlight the high to that low. Look now for the lowest point in this range that created this break of structure. Right over here becomes our 4-hour strong low. All right, we can then just quickly delete this. So over here is our break of structure, that M15 shift to the downside, that pullback, and that M15 bearish run to cater for the overall pullback, that M15 shift to the upside, that M15 pullback to then continue targeting these weak highs and to target the overall 4-hour weak high. All right, so over here now, we've had that new H4 break of structure to the upside. So that's our 4-hour boss. So what is expectational order flow now? We've now had that 4-hour break of structure. So I would like to see some more structure form on Euro USD to then have that bearish shift, that overall pullback. You can then potentially look for shorts to ride that overall pullback, which expectational order flow is now for price to respect this new 4-hour strong low, to have that M15 breaker structure to the upside, to then continue targeting those weak highs. So this is currently expectational order flow on Euro USD. So I'm going to leave this here for now. I believe I've gone through this video quite nicely in depth to give you a great introduction to how we understand structure here at Funded, how our community creates funded members on a weekly basis in our Discord. Our members have access to our full 3 structure type and SMC course, as well as ICT concepts. They have access to my full daily and weekly live streams where I mark up the charts live. We have 1 or 2 other members streaming as well that trade the same way and that take live trades. So you can also live stream trade with us if you guys would like to get access and become a part of the Funded family. Now, I do want to also make note for you, and I want you to understand this. This community is not some kind of fairy dust that is going to fall into your lap and make you wealthy and a successful trader overnight. You need to consume and practice the knowledge that I teach in this course and practice it yourself to start seeing how the markets move so that you can ultimately become your own independent trader. We don't live stream trade or post our signals just for you to go and copy and paste and to become profitable, but rather for you to learn from and become your own consistent, profitable, and at the end of the day, funded trader. But hopefully all of this has made sense. If it hasn't, let me know. Send me a message on Instagram. I would appreciate the feedback. For some of you that are already familiar with the way we do structure here at Funded, this would be quite simple for you. If you are new to the way we do things here, I do recommend just watch this video a couple of times. Practice on the charts yourself and you will start to naturally see it yourself. It's kind of like learning how to walk again. In the beginning, it's difficult, but once you get it and you nail it, it becomes second nature and you can see it on the charts without even having to mark it out yourself. And this is the first thing I always look for when hopping onto the charts is I map out my swing structure so I can identify the expectational order flow and which high and low points price is looking to target. Everything that is included in the Discord community is a full understanding of section 1, which is understanding supply and demand, understanding the basics, going over imbalance and inefficiency, which zones are the best to mark out, your wick zones or your overall body zone, understanding mitigated versus unmitigated zones, which institution is currently in control of the market, whether you should risk entry or confirmation entry, zone refinements. Section 2, the juicy stuff, where we go over multi-time frame analysis, complementing the lower time frame with the higher time frame. You will get a complete walkthrough. What is a break of structure? Complementing that break of structure with the high and lower time frames, strong and weak structural high and low points, which is crucial in understanding your 3 structure types. So once you understand those basics, we then jump into our 3 types of structure, which is what I've explained in this video. So we go over a basic mind graph example. We then go over a mapping it out example, which is a theoretical example. Then we go over fractal structure, a live walkthrough, swing structure live walkthrough, and a mechanical rule-based structure live walkthrough. All of the 3 types of structure put together in a theoretical mind graph, and then finally all of the 3 types of structure put together in a live walkthrough. Section 3 will go over understanding liquidity, understanding retail liquidity and why you get stopped out before catching those big runners, how to spot the liquidity before you become the liquidity, and live examples covering that. Uncovering the most important criteria for your zones, live liquidity scenarios, how to identify if price is just doing a sweep of liquidity or a break of structure, something that many price action traders get confused about. Section 4, we go over entry confirmations, change of character, flip zones, continuation entries, equilibrium zones, and my favorite, triple M entry confirmations. Section 5 is just something extra handy to have in your trading arsenal. We go over Wyckoff, and then section 6 covers risk management. We also then have all of our webinar recordings, which is our hourly long live streams that we do with the community every single weekend. We've got backtesting sessions. We've also got a more simpler system, what we call two-box system, which is a great way to identify your structure with a basic indicator. We've then got our entire ICT course that focuses on Judas swing, silver bullet strategy, and various other ICT concepts that are important. And then over here, you will have access to all of our live trades and markups that we take. We also have our live streaming channels over here where we live stream with the guys on a daily basis. And then also we have what we call the funded V2 Matrix EA, which is an indicator based on volatility and SMC volatility in the markets that you can use to manage your live and prop firm accounts, to pass them or to remain profitable on your personal live account with a personal broker. You'll also have access to our own prop firm where we give you unlimited time to pass your accounts. You have direct support with us and the CEO of this company, being Blue Guardian. Every single member of Funded gets 10% off of every single evaluation. We've specifically partnered with this prop firm to give you that discount. And these rules, extreme fast payouts from the same day to 2 days, 85% profit splits, and you can withdraw every 14 days. Over here, we have our passes and profits channel, people passing and creating payouts for themselves on a weekly and even a daily basis, following our rules that we teach in the course and following our live trades, not for the sake of just making money, but to learn from the way we've been trading like this for years so that you can replicate that and become an independent trader yourself. All of this is in the first link of the description of this video. You will see there's another video on the landing page of me going through everything in the Discord in a more in-depth video. So I recommend read through that page. It will explain to you everything that you get. And then from there, you will get immediate access to the Discord community and Funded. Without further ado, guys, take care. I'll see you guys in the next video. If you're going to join Funded, I'll see you guys on the inside.